Hi, my name is Mei Wu, and thank you for joining me on this short video about estate planning from a tax perspective. As trusted advisors to our clients, we have been proactive at KNP in ensuring our clients' will are organized and reviewed by KNP. The reasons for this are as follows. Number one, not all lawyers are estate planning lawyers. It is important to know that a lawyer should have some sort of a tax knowledge and understanding of various types of tax structures out there. I had an instance where the client's lawyer had prepared their wills, distributing properties that were held in a discretionary trust directly to their children. I also had another instance where the will of an individual had superannuation benefits directly distributed to their children as well. If this has not been picked up, there could be possible huge stamp duties and capital gains as a result. Number two, the inclusion of testamentary trust. Clients need to understand if there is a need to consider testamentary trust. What does it mean? And how does it impact beneficiaries in your will? Now, testamentary trust is established upon the passing of an individual. It operates similarly to any standard trust. The deed of the testamentary trust is actually contained in the will of the deceased, and the clause that in the will governs the operation of the testamentary trust. Testamentary trust is beneficial if you're dealing with a large amount of estate that you don't necessarily want to impact your personal tax circumstances, and enable you to utilize minor beneficiaries to receive trust distributions who will then be taxed at adult marginal tax rates. At present, minor beneficiaries are limited to only receiving up to $416 tax-free from a standard trust. Number three, binding death benefit nominations, also known as BDBN. Upon the death of that individual, your superannuation balance will need to be dealt with. If you have an industry or retail fund, your superannuation account will need to be closed. If you have a self-managed superannuation fund, your member balances will need to be paid out. Now, this depends on the types of assets held in your superannuation fund, which will need to be disposed first before the monies can be released to you. Your superannuation monies are not administered in your will, and this is very important. Instead, you will need to ensure that you complete a binding death benefit nomination form directing where the monies will be paid upon your death. Now, the above items mentioned are not conclusive and is dependent on client circumstances. They are just some of the standard items we review and go through with our clients. If you have got any queries and would like to discuss this further, please contact me or the team at KNP. Thank you for watching.